in sales. The USDA unveils its methodology behind dispersing trade aid dollars to growers, and at first glance, it can be a little confusing. Joining us now to help break down the calculations is AFBF Economist Veronica Nigh. Thanks so much for joining us, Veronica, and tell us about the model that USDA actually used to arrive to these calculations.
Well, this is some pretty technical stuff. Everybody get out your pocket protector. We're going to do a deep dive on these calculations. But basically, the model USDA used says, let's look at 2017 data and use that as a proxy for what exports to those countries who are imposing tariffs, what those would have been in 2018. And then let's take a look at the impact of the tariffs and how those tariffs have impacted sales. And then the difference between those two numbers is basically the impact of the tariffs. So it's going to be different for every commodity, but this is the model that the U.S. uses when we go to the WTO in disputes. So it's a model that we've used time and time again.
So it's something they're very familiar with already. Now let's talk a little bit more about the trend line. We were just showing it on our screen when comparing value exports with trade partners before and after the tariffs. Can you just explain that a little bit better for us?
Sure. So USDA basically looked at 5 countries. They looked at Canada, Mexico, EU, China, and Turkey. Those are the 5 countries that primarily have been putting on the retaliatory tariffs. They said, okay, so in 2017, this is what our exports of the products in question were. And now let's take a look at all of those tariffs that have been imposed and how much less did those countries buy of those products as a result of those tariffs. And then that delta, that change, is how the impact we think that those tariffs had. So USDA really was trying to isolate the impact of the tariffs. And we all know that farm prices have been very bad for several years. But what they're really trying to find there is a justifiable change that resulted just from the tariffs.
Okay, so let's talk a little bit more. You mentioned that they're trying to isolate each commodity. Let's focus on one, for example, say sorghum. Talk about how sorghum was affected by tariffs from China and how they arrived at the amount that they did for the trade aid.
I think grain sorghum is a really interesting example, or milo, wherever you are in the country, because China is such an important market for grain sorghum exports out of the United States. They're our #1 customer. So USDA said 2017 exports of grain sorghum to China. We're going to say that would have been the same trade amount in 2018. But because of the giant tariffs that China has had in place, we lost a lot of sales. So they took that total amount of lost sales and then divided it by the total number of production of bushels of milo that they thought the U.S. would have in 2018 to come to a per bushel basis, which was 86 cents per bushel, which is a pretty sizable margin when you look at the total sales price for grain sorghum.
Okay, now each commodity, as I understand it, has its own specific level of market compensation for this particular round of the market facilitation program. Can you elaborate on that, maybe walk us through it?
Sure. So as we were just talking about with grain sorghum, and in the same situation with soybeans, China's an incredibly important market. We know that. And that 25% tariff that China has put in place has had a sizable impact on our exports of grain sorghum and soybeans. Compare that to corn, which is also an incredibly important export product for the United States. But above those 5 countries who are imposing tariffs, it has been China and the EU who are imposing additional tariffs on corn. Well, but when you look at it, the EU and China only accounted for 3% of U.S. Corn exports in 2017. So the total impact of that tariff is significantly smaller than, say, for soybeans, which China is taking over 50% of U.S. soybeans. So the dollar impact is significantly lower. Now, of course, we know that for corn, an important element of exporting corn is through byproducts such as pork and beef. So there are other impacts of these tariffs because of those other feed uses. But when you look at it just from the basis of corn exports, which is what USDA was doing, that's how they got to 1 cent per bushel.
Okay.
So you can see that when you look at all those commodities, depending on how important those export markets were, the dollar value is going to be significantly different.
Okay, yeah, a lot of corn producers scratching their head over that 1 cent. But we really appreciate you breaking everything down for us. AFBF economist Veronica Nigh, thank you so much for joining us, explaining how each commodity was